Bitcoin, again, is the best performing asset this calendar year, 2025. Again, beating the S&P 500, beating the Mag 7, beating gold. Bitcoin is designed as such where you're better off on its team than fighting against it. You have two decisions to make when you encounter Bitcoin in your life. You either join its team or you stand in its way. So Bitcoin's actually going after, $400 to $600 trillion worth of purchasing power today. So is it too late? How many times does 2 trillion go into 500 trillion? I'd say Bitcoin has about a 250x left in it in purchasing power terms.
Bitcoin recently set an all-time high above $123,000 and is now trading steadily above $117,000, making headlines as 2025's top-performing asset once again. This latest rise was fueled by massive inflows into spot ETFs, growing institutional involvement, and big buzz around new U.S. crypto regulations, sending Bitcoin into uncharted price territory. Market sentiment is still strong, with trading volumes surging and more investors buying than selling, and analysts are already eyeing $125,000 as the next major resistance, while support sits around $112,000. Recent news points to Bitcoin leading every major asset class in gains this year, firmly outpacing the S&P 500, tech giants, and even gold. Analysts are shifting their long-term forecasts upward as a result, with price discovery in full swing and the possibility of reaching bigger milestones looking more real than ever. Instead of asking if it's too late, the real question for many is just how high Bitcoin might go, as it charges after a global wealth pool worth hundreds of trillions. As discussed in Jack Mallers' latest podcast, the choice for everyone is clear: join Bitcoin's team or risk missing out as it breaks new ground. As we bring you clips from his recent podcast, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the rest of the video.
Whether it's legacy financial systems, short sellers, those taking out future position shorts, the longer you try and hold Bitcoin underwater, the higher it's going to rip in your face. It's going to take your face off. It is the asset class that allows us to be where we belong, which is governed by Mother Nature. So it says, why is gold going up so much? Why isn't Bitcoin going up? Why is Tesla outperforming Bitcoin? Do like this, through the nose, out through the mouth. Breathe, breathe, breathe. You cannot tame the beast. You cannot tame the beast. Bitcoin is engineered Mother Nature. It's the best asset. Just breathe. Let it go. Let it do its thing. Zoom out. Touch grass. Go for a walk. See the sun. Go on the beach. Swim in the ocean. As I talk to you, Bitcoin, again, is the best performing asset this calendar year, 2025. Again, beating the S&P 500, beating the Mag 7, beating gold. Gold was it for a month, for 2 months. Just breathe, zoom out, chill. You understand? And the longer people, listen, the only winning strategy in Bitcoin is to play. Bitcoin is designed as such where you're better off on its team than fighting against it. You have two decisions to make when you encounter Bitcoin in your life. You either join its team or you stand in its way. Dollars distort your reality. It makes it really hard to understand the world. When I told this show that you guys have already lived through a Great Depression, because the Great Depression, the dollar was backed by gold. In the Great Depression, we were down 88% in dollar terms, which by proxy was gold terms. From 2000 to 2011, the stock market was down 88% in gold terms. So the dollar and the ability to print these pieces of paper, it's very distorting to the mind, right? And so when you see something all-time high, well, is that Bitcoin doing well or is that the dollar doing poorly? Now, the reality is it's never one or the other. It's usually a little bit of both. But this is Bitcoin priced in gold. And the reason this is relevant is, as you guys can see, we're still not yet at an all-time high here. Let me zoom this chart out a little bit. We're only sitting at 36 ounces of gold for one Bitcoin. And around 40 is the all-time high. So yes, we're at an all-time high in dollars, but we're still not yet at an all-time high in gold. Next, let me zoom this one out. This is Bitcoin priced in the Mag 7, still below all-time highs. So when people are out on the internet saying, oh, wow, Bitcoin went from 100 to 120,000 in like a weekend, that's the top, time to pack it up. Yeah, you must be new here. No, not time to pack it up. In fact, I don't really give a shit about Bitcoin's price in dollars. It doesn't even matter. Who cares? People say, what do you think the Bitcoin price in US dollars is going to be next year? I don't know. They print these things out of thin air. Who gives a shit? What about how many ounces of gold are you going to have to sell to buy a Bitcoin? How about that? We're still not at an all-time high. What about how much of your Facebook stock or your overvalued 10,000 times multiple NVIDIA shares are you going to have to sell to get some sats? How about that? We're still not at an all-time high. You guys think this party's over? Most of the party hasn't even shown up yet. We're the first to arrive. Now, Bitcoin is the only thing in the world where another unit cannot be made no matter the demand. I don't care how much demand. I don't care who has the demand. Doesn't matter who you are, where you are, how you are. There's none left for you. You have to get your units out of the market. Out of the market. You have to get it from the people that already have it. And so the reason Bitcoin goes through cyclical behavior is if someone says, I have $1 billion worth of demand. Well, Bitcoin doesn't have $1 billion worth of supply at $120,000 a coin. Sorry. Well, how about at 121,000? Nope. Well, how about at 122,000? Nope. How about 150,000? Maybe. How about $200,000 a coin? Possibly. But if you have that much demand, the supply is at a higher price. Do you understand? And so what you see in Bitcoin is these cycles where demand goes out and seeks the supply from those that have it. Think about they're prying the supply out of existing holders. And it's a fair distribution of time and energy because it's the people, guys, it's the people that have all the yachts and have all the big houses and have all the companies and have all the professional sports teams. They're the ones that are coughing up those assets to get Bitcoin. And it's all the early Bitcoiners. It's the sovereign individuals like us that are saying, fine, I'll give you a couple Bitcoin and I'll go get myself a yacht or whatever you desire in your life, however you want to spend your time. I'll go get myself a house. I'll go have 5 children. I'll go pay off all my debt. And so it's a redistribution of the wealth in society. And so what you see in these Bitcoin cycles is all the onslaught of demand has to find the price at which the people that have the asset end up coughing it up because it will materially change their life. You understand? And then we have a little bit of a bear market and we repeat. And so if you look at this chart and you say, well, where are we in the cycle? Boys and girls, we haven't even started yet. We're still in the yellow. We're early. We're the losers that show up before the ladies got there. But we don't give a shit because we're the winners. And here's the last slide. I love this chart. Listen, humans own a little over $900 trillion worth of stuff, okay? And you're looking at it. Gold, art, collectibles, equities, real estate, bonds, money, right? How much of that is Bitcoin? A smidge, 20 basis points. And so when people say, am I late? Late to what? You're probably late to Ethereum, right? I hate when people, it's just, shit coins are so frustrating. Because, if Ethereum or Solana or any of these dog shit tokens, if they were to ever achieve, let's say Ethereum were to do as much for the world as Apple Computer. Okay. I think you guys would all say that'd be an achievement. Would you say we're there yet? No, probably far from it. When I walk out into the street, I go to the grocery store, I go for a run, I go swim in the lake here in Chicago. I've never, ever met someone that uses Ethereum, like uses it, doesn't speculate on it, uses it ever. So let's say the equivalent of influence Ethereum has reaches Apple Computer, Steve Jobs, the iPhone. Okay, Apple's market capitalization is $3 trillion. It would be a dot on this graphic, just like Bitcoin is.
When people try to suppress Bitcoin's price or control it, it often reacts with stronger price movements because it's designed to resist control and manipulation. Bitcoin's actual value isn't clear if measured only in dollars, since the dollar can be printed in unlimited amounts, which blurs whether prices are truly rising. Comparisons to gold or major stocks show Bitcoin isn't at an all-time high in those terms, and that's because its limited supply makes buyers compete for coins from those who already own them. This competition drives cyclical price increases whenever demand spikes. The people selling Bitcoin in these cycles are usually trading for things that matter to them, like houses or new experiences. Despite the attention around Bitcoin, it's still only a small piece of global assets compared to things like real estate, bonds, and art. Let's watch more clips from Jack Mallers and gain insights.
Bitcoin is money. It's trying to recapitalize us all on something that's fair. Do you understand that Bitcoin, looking at this chart, about half of these things we use as a savings account. Half the real estate owned in the world, people aren't consuming to live in it. They're owning it to save in it. The $10 million art piece, how many $10 million art pieces are stored in the back of a museum? Are stored in a vault. They're not hanging on your wall. Because guess what? There's not that much demand for a $10 million art piece to hang on the wall so your toddler can pick up and throw your spaghetti at it and ruin your $10 million. People don't want to consume $10 million worth of art. They want to save that $10 million worth of art because they think they could sell it for at least 11. So Bitcoin's actually going after, I don't know, $400 to $600 trillion worth of purchasing power today. So is it too late? Well, how many times does 2 trillion go into 500 trillion? I'd say Bitcoin has about a 250x left in it in purchasing power terms, not in dollar terms. I already explained myself. Don't try and confuse me with that dollar crap. I'm too much of an OG to be confused with that flaky piece of paper in purchasing power terms. So is it too late to speculate on shitcoins? Probably. Yeah, I'd say so. Because even if a shitcoin goes on to be the next Apple computer, which newsflash, it's not. Oh, you're talking about a $3 trillion market cap. Okay, whatever. That's like the size Bitcoin is now. While Bitcoin's going after $500 trillion. We are not the same. Is it too late to scam people with shitcoins? Probably. Is it too late to change your life with Bitcoin? Not even close. The party hasn't even gotten started. Bitcoin Global M2. You see this chart floating around. Listen, I'm not one of those guys that's like, waking up and taking out a magnifying glass and zooming in on Global M2 and then implying the Bitcoin price. That's not my swag. I don't think markets work that way. Things are cool until they aren't. I've seen many, many chart pattern trends over my 13 years in Bitcoin. They work up until they don't. And then people realize wow, we were stupid for thinking that was religion. But the reason I think this one's kind of funny is because it tells a story here that I think is incredible. If you print money, Bitcoin goes up. That is law, right? That's what this tells me. And I love it. I love it because printing money is taxing the population. It's saying everyone in the world, oh, you want eggs? Oh, you want a vacation? Oh, you want gas in your car? Oh, you want a house? Oh, you want to have kids? You're going to have to work more hours. You're going to have to sacrifice more. You're going to have to go through more pain because of the money we print. And there was never an equitable solution available to everybody because a human just says, I want to contribute value to this world and I want that value to be respected through space and through time so that I can live a life that I want. That's all a normal person wants. And Bitcoin is our solution now. And what this chart tells me is, go ahead, print all the money you want. You print the money, I make it on the back half with Bitcoin. Go ahead, because guess what now? Guys, you see this tan? I'm looking like a freshly baked chocolate chip cookie. What is my life? I eat the food that treats my body the best. I don't have to worry about inflation for my groceries. And that's not a rich guy comment. That's a Bitcoiner comment. It's riskier not to own Bitcoin than to own Bitcoin. Wow. Pinch me. First bullet, the traditional 60-40 stock bond allocation model is dead. Is Rick listening to the Jack Mallers show or what? Get the hell out of here. I agree. This is due to unprecedented rates of longevity brought about by remarkable advances in exponential technologies. Now he's being polite. It's due to a lot of debt and printing of money and stupid decisions. Anyway, we agree. 60-40 portfolio is dead. Put Bitcoin in there. That's what's happening. And the size of your position depends on the context, but 60-40 dead. After 39 years in the financial services field, I'm announcing for the first time the correct Bitcoin allocation. Conservative investors should now have a 10% Bitcoin allocation. Moderate clients should have 25% of their portfolios in Bitcoin. And aggressive clients should allocate 40% of their Bitcoin or investments to Bitcoin. Here on the Jack Mallers Show, we don't give financial advice, but I have over 100% Bitcoin allocation. So I think Rick's trending in the right direction. I love it. Owning Bitcoin is no longer a speculative position. Failing to do so is. A passive market-weighted index comprised of all asset classes would have 3% in Bitcoin. So an investor who lacks Bitcoin is now effectively short. I love this guy. Look at my closet. You want to see what not shorting Bitcoin looks like? But no, when I first went on CNBC, like, who's this weirdo in the empty closet? Now you got the big RIA, a million clients, $300 billion asset managers saying basically owning anything else is shorting Bitcoin. Yeah, damn right. Oh, man. There's no logic to emitting an asset class that's outperformed all others for 15 consecutive years. This guy's got to have a Bitcoin Twitter account. There's no way. And is widely projected to continue to do so for the next decade or more. Historic performance data show that portfolios with Bitcoin have generated higher returns with lower risk and produced superior modern portfolio theory metrics. We've talked about the Sharpe ratio on here, and Sortino ratios, standard deviation, max drawdown compared to portfolios that lack Bitcoin. Fact, true. Guess what? Everyone live here in this YouTube chat has outperformed the best performing hedge fund last year. By doing what? Staying humble, stacking sats.
Bitcoin, according to Jack Mallers, is meant to act as a form of money that gives everyone a fair way to save and protect their wealth. He observes that people often use assets like real estate and expensive art as ways to store value, not necessarily to use them day to day. He feels that measuring everything in dollars doesn't make sense because the value of money can change so much when more of it is printed. He points out that even if a cryptocurrency somehow matched companies like Apple in value, it would still fall short of Bitcoin's potential reach. Jack Mallers explains that whenever more money is printed, Bitcoin's price usually increases. For him, this means that while inflation forces people to pay more and work harder just to keep up, Bitcoin stays predictable for those who hold it and use it for savings. He says that unlike before, everyday people now have a way to save using something with lasting value, which was never available on this scale. He believes anyone can benefit, and often jokes that his own quality of life and even how he eats have improved thanks to using Bitcoin as protection from rising prices. He argues that traditional portfolios made up mainly of stocks and bonds are outdated, and that owning Bitcoin is not just a risky bet anymore. He shares that major financial experts are now recommending that investors dedicate a significant portion of their portfolios to Bitcoin, with the specific percentage based on risk tolerance. According to his comments, not having any Bitcoin in a portfolio now effectively means betting against it. He points out that Bitcoin has outperformed all other assets for the last 15 years and is projected to keep doing so, highlighting research that confirms portfolios with Bitcoin have achieved higher returns and lower risks. This is no longer just his opinion, but is supported by both performance data and a growing number of leading investors. With Bitcoin reaching new heights and momentum building, do you think we'll see $150,000 or even higher before the year ends? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.